Welcome to the Transparent FX Academy. My name is Nick and I'm a top podder on TradingView. And as a top podder, today I'm going to show you exactly how you can become a profitable trader by exploiting multi-time frame technical analysis and order flow. Now let's not waste any more time. Let's go straight in the charts to find some good trading opportunities. The pair that I want to speak about today is AUD CAD because lately it has been providing some very interesting price action. So it's definitely time to make an update and understand exactly what kind of situation we currently have on it and how we can be looking to take a nice opportunity, swing trading opportunity on it. Now, as usual, the way in which I will be providing the analysis is first from a technical perspective. We will then go and see what we have from a COT perspective, so commitment of traders, which is what hedge funds are currently doing in the market. So the order flow from an institutional perspective. And obviously, if you're able to understand what hedge funds are doing in the market, you have an advantage over your competition because you're able to trade alongside the smart money in the market. So after performing analysis, both from a technical and in order flow perspective, we will be able to put these two different types of analysis together and understand where are the best probabilities for a trading opportunity on this pair. So as usual, I will try to keep the analysis as educational as possible so that you can learn some very important concepts when it comes to swing trading in general and obviously performing a live analysis in the market. Now let's start from the monthly. Now on the monthly time frame, what we can quickly see is that the market has provided a W formation. So after a market creates an impulse, a correction, a lower low and a higher high, what you want to see is the market create a move to the downside to go and complete the pattern exactly at the previous monthly resistance, which is now turned support here. So we would like to see from a monthly perspective, the market create a nice move to the downside to go and test this structure to grab some liquidity before creating the continuation to the upside. So from a monthly perspective, after this impulse, correction, lower low and higher high, we would like to see a deeper retracement to go and test exactly this area here, which is the previous monthly resistance, which is now turned support here. Now what we can also see if we zoom out is that all this area here is also structured from a historical standpoint. This is a historical structure level for this market, which was acting as support here, again support here, again support here, and then the market broke it to the downside. At that point, it is turned resistance. The market respected it, then it broke above it, and currently this area is acting as support. And we should see the market go for a deeper test of this support before creating the continuation to the upside. So from a monthly perspective, what we know is that we do expect a deeper retracement before the continuation to the upside. Going down on the weekly time frame, what do we see? Now, from a weekly perspective, situation is quite clear. We have a market that created this M formation. After the M formation, we had the completion at the neckline and the continuation to the downside. Then the market went and retested this previous support, which at that point is turned resistance. The market first respected it, but then broke back above this structure, which means that at the moment, from a weekly perspective, what we have here is an area of previous weekly support, which was broken to the downside and turned resistance. But now that the market has broken again above it, this area is turned again support. Therefore, from a weekly perspective, we have previous weekly resistance, now turned support, which we do expect the market to go and test before a possible rejection to the upside. So on the weekly, we do expect a move to the downside to go and retest this strong support to see how the market will actually react at this area and how the market can grab some liquidity before creating the next move on this pair. So on the weekly as well, situation is quite clear. Going down from a daily perspective, what we can see. Now on the daily time frame, the market has been providing some quite clean price action. We did speak about AUD CAD quite a few times in the past. We spoke about it when the market was here. I made a full breakdown explaining all the reasons for which from here we wanted to see the market create this move to the downside for the creation of a lower low, We then spoke about AUD CAD again after this retracement. I made a full breakdown explaining all the reasons for which from here we wanted to see first this retracement and then a continuation to the downside for the creation of a lower low, and that is exactly what the market did. Then after this W formation, I made a full breakdown explaining all the reasons for which from here we wanted to see the market create this move to the downside, and again, that is exactly what the market did. Then we had this retracement all the way up to the supply that we had at this zone, and when the market was inside of this supply, I made a full breakdown explaining all the reasons for which from here we wanted to see the market create a nice drop to the downside, and that is exactly what the market did. Then after this drop, we had an M formation on the weekly, and I made another breakdown explaining all the reasons for which from here we wanted to see first a retracement and then a continuation to the downside, and again, that is exactly what the market did. Then we spoke about AUD CAD after this impulse. We wanted to see a correction exactly to this supply generated by this green candle here before a rejection to the downside, and again, that is exactly what the market did. And with the very last analysis, what did we say? With the very last analysis, we spoke about the fact that the market inside of this zone here had quite strong demand. So we wanted to see a break below the area, and then on the retest, we could be looking for the continuation to the downside. However, in creating the move to the downside, the market found extremely strong demand and created this huge rejection to the upside. So with students, we didn't look for any kind of shorting opportunities on AUD CAD, as the market was clearly rejecting the zone to the upside very aggressively. Now, I will link all this previous analysis in description. So you find everything linked in description, so you can go and check it out for further reference and more free education. Just a quick reminder, make sure you comment below and you let me know which pair you would like me to cover for a training opportunity in next video. But what is the next opportunity for AUD CAD? And what is the situation at the moment from a daily perspective? Now, at the moment on the daily, we have a market that has just provided this W formation. Now, in general, after a W formation, what you want to see is the market create a move to the downside to complete the pattern at the previous daily resistance, which is now turned daily support here. So we would like to see the market create a nice move to the downside to complete the pattern at this previous resistance, which is now turned support. And before I show you how we will be approaching this kind of situation for a possible move to the downside to go and complete the pattern at this area, let's first go and give a quick check at what we have from a COT perspective. So commitment of traders, which is what hedge funds are currently doing in this market. Now, from an AUD perspective, we can see that with the last report, hedge funds have shifted their positioning from a positive net positioning to a negative net positioning. In fact, we can see that we went from having 8.8k net positions to having minus 1.3k net positions. So we went from having more longs than shorts, with 59.6k longs and 50k shorts from an institutional perspective, to now having 56k longs and 57k shorts from an institutional perspective. So more shorts than longs, with 7k shorts added with the last report and 3.1k longs getting closed. Also, we can see that the long exposure was obviously decreased from 45.8% to 42.1%, and the short exposure was increased massively from 39% all the way up to 43.1%. So AUD getting quite weak. And from a CAD perspective, what we can see now on the CAD, we can see that unfortunately we didn't have proper longing. It would have been great to see longs added on the CAD for our overall short view of AUD CAD. However, we don't see the longs getting added. However, in the long term, what we can see is that we went from having minus 33k net positions all the way up to having minus 20k net positions. So in the long term, we have seen CAD getting a little bit stronger, but overall CAD is still quite weak, which means that we can still have continuation to the upside without a proper retracement. But that is perfectly fine. Why? Because trading is reactive, not predictive. And the monthly, weekly, and daily timeframes combined with the COT data are the best timeframes when it comes to the directional aspect of the market. But the best timeframe when it comes to confirmations and entries is the 4-hour time frame. And at the moment, what we can see. Now, at the moment, from a 4-hour perspective, we can see that the structure of the market is absolutely bullish and the momentum as well is extremely bullish. And until the market will remain like this, from a 4-hour perspective, the market will easily continue to the upside. So at the moment, we obviously cannot be looking for any kind of shorting opportunities because the market can easily and should actually continue to the upside until the trend will remain in such a bullish state from a 4-hour perspective. That is why trading is always reactive and not predictive. And we also have to wait, and we always have to wait for proper confirmations. So what we will be doing with students is monitoring price action from a 4-hour perspective during this move to the upside. And as soon as the market will shift from a bullish market to a bearish market from a 4-hour perspective, at that point, we will add AUD CAD to our watch list. And as soon as the market will provide to us one of our valid entries, we will be taking a nice short with a very good risk to reward and very good probabilities for the move to the downside and completion of this W formation or overextended W formation if the market will continue to the upside, to the downside. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis and education on all my platforms. Also, make sure you go and check out the mentorship program. You'll find the link in the description. It's a very complete program. You first learn all the rules of my rule-based strategies, and then you trade them live with me. Each and every day you get a new daily market breakdown showing you exactly how to apply the strategies with entries, stops, and take profits, as well as having me answering all your questions personally every single day. So I really suggest that you go and check it out. The link is in the description, and I will see you in the next video.